Good morning, everybody, and welcome to today's morning market. So today I'm focusing in on the US ISM manufacturing data and US equities reaching a new high. Okay, so let's just start with the US ISM manufacturing data and really what is it? What does it illustrate? So it's a survey. And within that survey, the Institute of Supply Management, so ISM, surveyed different purchasing managers in the manufacturing sector. So it's one number. Within that, if the number is greater than 50, it indicates expansion, which is positive. If the number is less than 50, it indicates contraction, which is a little bit more negative overall. But really, it's just a way for investors, economists, to help judge the health of the manufacturing sector in the US. Now, I've really bigged this one up by telling you all about it, but what was the number that we saw yesterday? So the number came in at 48.5. Now that is in contraction, but actually compared to previous month, which was 46.5, you have seen a significant improvement there. And actually compared to economists' expectations, which were 47.5, you can see that actually the number came in ahead of those expectations overall. And actually, if you look at the data set itself, this is the highest level that it's been since June time. Now, what has led to that improvement? So if we just look at the individual subcomponents that make up the number itself, generally there's been an improvement across the board overall. So just to give you some figures there, new orders moved to above 50, so expansion, but the other components of production, employment, inventories, they all improved. If we look at price pressures, they've eased, and supplier deliveries, the index contracted less overall. Now, what were the comments from the Institute themselves? So they said that demand does remain weak as companies prepare plans for next year. However, they now have the benefit of the election cycle ending. Suppliers continue to have capacity, with lead times improving, but some product shortages reappearing. But really, what's our take on this? What you're seeing is that the data set has improved. We're still in contraction, but it's clearly moving in the right direction compared to previous months. If we look at the subcomponents, it's pleasing that there's actually a broad improvement across those subcomponents overall. We know that demand still remains a little bit weak within the manufacturing sector within the US. However, that is improving overall. How did asset markets react? Well, we saw the dollar increase on the day by around about 0.7%. So that was on the back of the PMI data, but also on the back of the political tensions that we've been seeing in France, where investors have been looking for safe havens overall. Within equities, generally actually a very positive day for equities overall, and in sterling terms and in local terms as well, local currency terms, you've actually seen US equities reach a new high. So a very decent start to December in respect of asset market movements. That's everything from me. I hope you enjoyed today's morning market. Look forward to speaking to you soon. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.